What is going on, everyone? My name is Kenneth Beard here with Stock Indices, where I go over my thoughts on the overall stock market and I go over economic data reports and I put that all together to make an overall assumption for you all so we can make money making trades. So, today is Wednesday, October 14th. Wednesday, excuse me. Today is Thursday, October 14th, and I'm feeling good today. I'm feeling good today. I hope you guys are feeling good today. Um, we have not that many economic reports, but you know, these economic reports still do make an impact in the market. So, I'm still going to go over them, even though there's not a lot now. For some reason, my page is not loaded up yet, and it take a very long time to update this page. But here we go. Here we go. Now it's updated. So today, for the economic data reports, we had initial jobless claims come out previously at 329,000. We're dropping that number down. We're expecting to only go to 318,000, but we actually dropped below that 293,000, which is good, showing that more people are going back to work. So that's for the initial jobless claims. For the initial jobless claims, we can see that same number drop down for the continuous jobless claims from 2.73 million to 2.59 million. So initial jobless claims, those are the jobless claims that are being input that are for this month in particular. The continuous jobless claims, just the singular number, not the full million number, but you got the continuous jobless claims, which is that number giving that broader outlook of the entire country in itself. What are all of the continuous jobless claims? What are the jobless claims that are continuing on? And so you can see that number there from 2.73 million to 2.59 million. So that number is dropping. And we got our producer price index going from 0.7%, expected to be around 0.6%, but dropping down to 0.5%. So we can see the producer price index kind of sliding off a bit, just letting us know that the goods that domestic producers are selling for, the price of those goods are dropping more, allowing for people like us that do a lot of domestic um, domestic purchases, buying things out of the country and things of that nature. Um, those it's being a little bit more affordable here with that number dropping a bit, coming from like I said, 0.7% down to 0.5% on those numbers. So then we had a couple people speaking today. At 12, they probably already spoke. The New York Fed, and then Richmond Fed President Tom Berlin speaks, and Philadelphia Fed President Patrick Harker speaks. So I'm not sure if I'm going to watch any of those, but if you guys want to go ahead and tune into those, they may be on Yahoo Finance. I'm pretty sure you can find them somewhere. Maybe go, if you got cable, CNBC or something like that. But those are taking place today, so keep an eye out for those. They could have a slight impact of volatility with the rate the market's going though. And I don't think it's going to do much. Looking at these mini S&P 500 futures, baby. Like I said here, let's move myself out the way. Yesterday in my video, I said that it looked to be that the market was finding some bottoming support now. I said it could go sideways or it could continue to drop or consolidate. Like I said, sideways, consolidation, drop, or it could pause a little bit and go down. Or the third option here is what we're getting right now. The market is breaking from out of that trend that we've gotten for the past month or so. We've been seeing this downtrend and the resistance level above, and right now breaking out of that resistance, showing some very heavy bullish action for the S&P 500, and it could be with the intense drop in initial and continuous jobless claims. That could be the reason why that we're getting such a big drop. I mean, not a big drop, but a big spike in price. Now, or it could just be all psychological. It is a key level that we're seeing here with the overhead resistance. So I'm not surprised that now the market is pushing above and breaking out of that pattern after seeing such of a long downtrend. We never made it to the 180 day. Thank God. That would have been you know pretty bad for the market. But we see that with this breakout, there's not quite a bit of volume in here. Now the day is not finished. We still have a lot to go, and we're up. It's only 1 o'clock right now, so the market could continue to rally higher, um, or it could pull back. You know, really, what we want to see is this hold. We're right piercing above the 50 and the 21 day moving average. So, there is a possibility that this could be a fake out. So, still be careful. It's a very strong possibility. Now, it did open and close. It hasn't closed yet, but it's opened up above the previous low day high candle. Um, um, and so what we want to see today is this candle close. If we can close, have a strong or even decent close above that previous high low day, then I think that this market is going to continue to see uptrends from here, and we may be at the end or near the end of that bearishness that we were seeing inside the stock market and the broader indexes for so long. So here's what it looks like on a 4-hour chart. We can see made a lower high. Market participants held it up. The demand was here. The demand obviously got soaked up. I mean, the supply obviously got soaked up by whatever demand was down here. Any institutions or any big hedge funds and just people trading in general all thought that the market was ready to go back up here. So that's what we're seeing. And if you would have played some calls on this, you could have made some money on that break of that trend. But I'm not that much of a speculator, so I didn't play that. If anything, I would try to take the IV crush from writing some premium on that, or just doing some debit spreads or something like that. But other than that, very beautiful day for the stock market. As of right now, we still have about 3 hours left, so want to keep that in mind, that the day is not over. But the next thing that we'll be looking at is the NASDAQ composite, the QQQs here, doing a little bit of the same thing. Let's go to the daily chart here. Doing a little bit of the same thing, actually gapping up today. And so with that gap up, gapping right into that 21 and 50 day moving average, we could potentially see a gap and go tomorrow. With the if volume starts to kick in here, that's my only thing. I'm not seeing much volume kick in on these moves, which is the only thing that's a little bit concerning to me. But so I'd still keep an eye out on it, and play it caution until we really get confirmation on this trend, because volume just isn't there yet. So it's quite interesting. But as far as the technicals go, those are all very much in line. So that's for the QQQs. Looking at the VIX, volatility here. Volatility falling off, gapping down. We got volatility now at 17.4. Yesterday we were closed at about, what is this level here? We closed at about 1865, and we're opening up, just dropping down on volatility, right back down to those lower levels. So looking pretty nice for volatility here, in my opinion. Volatility is still down. Volatility was at 26.28, and we could slowly see the decompression of that volatility coming back down to those lower levels. And so as long as volatility can sustain these lower levels for the period of time that the market is starting to make new highs, I think that the market is going to do great in the next few months leading up to the new year. So that's what we're looking at for volatility. The next one we'll be looking at is bonds. Bonds here up even more. Yesterday, the last 2 days, we've been moving up a basis point a day. We haven't moved up a complete basis point, but we are seeing a nice uptrend still. We got a high right here that we're watching out for. And this high at this level, we want to see if it acts as some resistance or not. That's just for those who trade bonds. But, once it gets back up to that level, it could act as some resistance. But if we just blow through that thing, hey, bonds going up indicates that interest rates are lowering, and that is good initially for the market, essentially. And so that's what we want to see, and that's what it's giving us. It's showing us that, hey, whatever borrowing power that the economy is giving to the citizens is now increasing. So interest rates, the biggest thing, when the Fed decreases those interest rates, we see bonds fall off. When the Fed, no, we see bonds fall off when interest rates rise, and when interest rates go up, we see we see yeah. But I'm sorry, I'm having a brain fart here. When when interest rates go up, we see bonds fall. When interest rates go down, we see the bond markets tend to move in a higher direction. That's what we're getting right here. We made a bottoming pattern here after seeing a big sell-off. With the bearishness that we were seeing in the market, you can see bonds reacted to that. But right now, bonds showing us the inverse of that, as well as the market making higher, breaking that bearish trend, and bonds also getting ready to break out of that bearish trend. Everything's starting to come in line, and this is what this is what we like. We like to see the market regain that equilibrium, regain, that bullishness that the market tends to give us. But in times of tragedy, we get that bearishness every now and then. It's not so bad though if you know how to make money on the downside. But if you're purely long, I'm not purely long, but I do like to see the markets consistently making higher highs. It's just easier to trade that way rather than the volatile downward spikes that you know the market gives us on occasion on different occasions. So yeah, that's for bonds. Sorry, I was really having a brain fart there. Like I don't understand. Like I said the same thing like 3 times in a row. But the next one we're looking at is RUT here. Now RUT also making a nice up move. We had that squeeze period where bonds were just moving sideways very tightly. And what did I say? Once the market takes off, the RUT and the Russell 2000, boom, it's going to take off as well. And that's exactly what we're getting right here. Looking like it's gapped right above those moving averages. And it's looking like it's going back to its 52-week high now. I would love to see RUT consolidate at the 52-week high and just blast off. This thing has been in a consolidation period for such a long time, like since June. Like it's really ridiculous for such a long time, as long as I can remember. And so, like I said, look at the date down here. This thing has been on in a consolidation period since I can. So once this thing gets ready to break out, I think it'll look good. I think it'll be nice. I think that it'll continue to make highs, and I think that once it does break out, it will be a pretty strong breakout, seeming as though we've been in this sideways pattern for such a long time. But that's all I got for RUT here. Is there anything else I need to go over? I wanted to go over Google. Just looking at Google here. Let me move this drawing. I like to, watch Google. And so Google doing the same thing. Google kind of looks like the index, in my opinion, because Google was having that downtrend and also gapped right above. If you want to play Google, it could be a nice money maker on that if you're good at writing puts. And so that's what my plan is on Google, is to write some puts off on that one, and let the market take it up. Now it's not going to be as much as a volatility play, implied volatility play, because implied volatilities, if you look down here, is all already starting to crush. We're at the 26th percentile though. It could go back down to 16%. So if I sell anything pretty soon, I could still get some of that volatility advantage. But yeah, that's my plan on Google, is to write some puts on that, and then write some puts on the overall market, and you know, see how those go. So yeah, that's my plan. Just wanted to go over that with you all because that's what I was looking at. I like trading these bigger names because I get more premium, and I sell. I'm by nature an option seller. I'm just kidding, but I like selling options. It's my style, and so I look for these big names like Amazon, Tesla. Tesla's all over the place. It's crazy, but and the indexes, and I make pretty good money doing those things, and so that's kind of what I stick with, and that's my style. So that's all I got for you guys today. If you enjoyed this video, leave a like, comment, subscribe. I make these videos for you all so you can have informative information to go out here and make money making trades for yourself. If you enjoy these type of videos, then click up in the right corner, because I'll have another one of my videos which also go over this type of information. And yeah, we just want to learn together, this community to that I empower other people to learn this type of thing, to make that passive income, or to make faster income, however you want to do it. But this is why I do this, to have you guys be able to just come on here, watch this video, and get a broad perspective of what's happening in the markets, and also get a little bit of my brain and what I'm looking at as well. So if you enjoyed this video, like I said, leave a like, comment, subscribe, and I will see you all in the next one.